Good morning, Accounting 110. Today is February 22nd, and the lecture today looks like it's on Chapter 4. I thought we already covered Chapter 4, but I don't see a recording set up, and it looks like that's what the schedule calls for. So I'm going to go into Chapter 4, and if it turns out that I'm a chapter behind, I'll do another lecture today. And make sure I get that out to you on Chapter 5. But let's go into Chapter 4 and see what we have in store for us, okay? Let me share the screen. Share and share alike, okay? Okay, I trust you can see the screen now. Journalizing and posting transactions. In chapters 1, 2, and 3, we learned about the accounting equation, and we learned a little bit about debits and credits and how balances change and how to get into the financial statement preparation process. Here, we're going to talk about basic journalizing and posting of transactions, okay? And we have our first visitor of the day. Hi, Ellie.
Hello.
Hi, welcome aboard. We're going into Chapter 4, okay, Ellie?
Okay.
I don't think we did Chapter 4. So this is the first chapter after your test, okay?
Okay.
All right, so here we go. You came in at a good time. I was just getting started. We talk about source documents. Paper, huh? Source documents, a fancy word for paper. What are some source documents? Well, invoices, right? Cash register tapes, purchase orders, even copies of emails and texts that give some instructions. So in the flow of financial data, we're going to analyze what happened using source documents and the company's chart of accounts, enter business transactions in the general ledger. That's what we're going to look at later here. And then post those journal entries to the general ledger and prepare a trial balance. So I guess the sequence might be source document, enter the transaction via a journal entry. If you're happy with the journal entries, you post to the general ledger, and now you're ready to prepare a trial balance and perhaps do the financial statements. Explain the purpose of source documents. Well, we kind of just went over that, huh? Any document that provides information about a business transactions, it can be a trigger to get us going. It begins the process of entering transactions, and it's objective evidence of business transactions, typically filed away for future reference by your auditors or your internal auditors. And what are we talking about here? Check stubs, copies of checks, receipts, cash register tapes, memos of cash register total. Memos is a big important one. Sales tickets, source document, paperwork, huh? You often hear about the paperless office. That will never happen. You will still have to work with source documents. Let's go over the chart of accounts. The chart of accounts. It's a list of all the folders, if you will, in your general ledger. It's a list of all the accounts used by a business. Let's understand clearly that it's presented in numeric order. Numbering should follow a consistent pattern. The numbering goes in this order: assets, liabilities, equity, revenues, expenses. And it's used to determine what accounts are affected by a given transaction. So here's a peek at Mitch's delivery service chart of accounts. Notice that it begins with assets, liabilities, equity, revenue, and expenses. That's universal. Every company in the United States does it this way. Typically, your assets can be numbered with a 1, liabilities with a 2, equity 3, revenues or sales 4, and expenses you could have 5, or you could have 5 for selling expenses, 6 for general and admin expenses, But the key thing is that these things go in the proper order, okay? Assets, liabilities, equity, revenue, and expenses. Give me a second here. Journalizing. Okay. A day-by-day listing of transactions. Purpose, they provide the record of the transactions completed by the business. Throughout the working day, you may have to go to your computer a couple times and enter what's called the journal entry. The electric bill came today in the mail. We opened it up. It was $500. Last month was about $480. The month before was $490. $500 seems reasonable, and we recorded the journal entry, commonly referred to as the book of original entry. Okay, that's something they like to put on the test for some reason. The journal is the book of an original entry.
Okay.
Question, Ellie?
No, I was just agreeing with you.
Okay. The simplest journal form is a two-column one, and the act of entering transactions is called journalizing. Entering transactions is called journalizing, and the transaction should have date, title, amounts, and descriptions. So let's take a look here, okay? Journalizing. We're going to go through just a couple transactions. We're not going to go through all of those again. Journalizing example. Mitch opened up a business with a deposit of $5,000. Okay. Now, notice that the transactions now have dates with them, Ali, so we can put them in properly. Well, it was on June 1st. So they start off by showing you where you put the date. And let's get to the final. Here is what the journal entry looks like. This is, I guess, your first look at a real journal entry. You set up the date. On the top of the page here, you could put the year down if you want. Not for every transaction, though, just at the top of the page they recommend. But anyway, you've got the date, and then you have cash on the first line. And look what we're doing with cash. We're debiting cash, right? It's an asset. It goes up with a debit. Capital, an equity account, that goes up with a credit. So there you have a journal entry. We debit cash, we credit capital. And our explanation can be very simply to record owner's investment. They're saying owner's original investment in delivery business. That's okay. The explanation of the entry is entered on the next line, indented a little more, leave a blank line between transactions. And notice, Ali, that the credit is indented. We see that? Give yourself an inch or so, and then put the credit in when you're writing journal entries. Cengage, when you're doing your homework, will do this automatically for you, which is a nice thing.
Mm-hmm.
Compound entry, it just means more than one debit or one credit. You do the debits before the credits if you possibly can. That's the expectation. It doesn't, if you did it the opposite way, it would still be correct, but it would look odd to the auditor and cause that person to have a little more trouble digging into your records, okay? Compound entry, that means that we have more than one debit or credit. And here they're just showing you some journal entries, okay? Journal entries. We have supplies. We purchase supplies. Debit supplies, indent, credit cash. Receive cash from a customer, huh? A couple of customers just paid us. The library and the School of Music. Cash, first line debit, $1,900. Accounts receivable, we credit $1,900. Looks like he bought some delivery equipment here. Delivery equipment, and he did it with a down payment. So, Ali, here's what they call a compound journal entry. It has more than one debit or credit. In this case, 2 credits. He bought $1,000 worth of delivery equipment. We debit delivery equipment. We credit cash for $300 because if you remember in that transaction, he had to make a down payment of $300, and then he was able to finance the rest through accounts payable, $700. and etc. Prepaid insurance, cash. Notice the debits come first, credits come afterwards. Credits are indented, very important. Explanation that they're telling you indent that a little more. I guess that's okay. I've never really noticed that before. And the drawing, okay? So that's a look at journal entries, what they look like. Post to the general ledger. Now, Ali, preparing a journal entry doesn't affect anything until you post it. You might work in an office where you're the accounting person, and throughout the day you've gone back and forth a little bit. Maybe you prepared a dozen, say, journal entries, but you haven't posted them yet. At the end of the day, perhaps you're going to look at the journal entries one more time, verify them that you're comfortable they're correct, and then you're going to post them. You're going to hit the button on your computer called Post to the General Ledger. And now what you've done is update the general ledger. You've updated the general ledger with a permanent account that can never be removed. If you make a mistake posting, all you can do is reverse the original entry and then put the correct entry in properly. Okay?
Okay.
General ledger. What's the general ledger? That's all of our folders, right? A complete set of all accounts used by the business. And they're similar to T accounts. We used T accounts earlier in this class to give you a feel for what the general ledger looks like. The T accounts were a poor man's general ledger. And the general ledger is where we keep a complete record of debits and credits made to each account as a result of posting journal entries. The general ledger is numbered and arranged just like your chart of accounts. It's going to start with the 100s, the assets, the liabilities, the equity, revenues, expenses. The accounts were introduced previously to mimic the general ledger. However, businesses are more likely to use a version of the account called the general ledger account. Yeah. So take a peek here. T account versus general ledger. There is your T account. And remember these transactions, Ali? Mitchell opened up the business with $5,000 in cash. Yes. And then he had some more cash infusions. Then he paid a bunch of bills, huh? And he ended up with a balance in cash of $470.
Mm-hmm.
When you hit the button post, this is what you're going to generate. Here is your general ledger. The first good look at the general ledger. June 1st, you can put the year on top only if you want. June 1st, debit, cash. At that point, Mitch had $5,000 in cash, but then he spent $2,000, and then he spent $600. That gets posted over here as credits, and notice that you're carrying forward the balance. You're taking the beginning balance minus the 2, minus the 6, and you come to $2,400 balance. So the difference between the T account we were working with and the general ledger is the general ledger is keeping the balance going for you all the time, okay? Mm-hmm. And it looks like he had some more cash infused here, and that got him up to $4,500. So that's not too bad, I don't think, looking at how it posts to the general ledger. At the end of the month, our T account, we had $470, okay? Here, they're showing $470 right here. The month ends, the month cuts off. The auditor is going to come in, perhaps, and say, 407, we'll say we're a bigger company, huh? $470,000, huh? Show me how you got to that. And they'll pull these transactions out and go through them in excruciating detail. Posting. The process of copying the debits and credits from the journal entries to the ledger. It's done daily or at frequent intervals. I know my life, I worked with one company for a long time, and the way my people did it, and we all did it, We came in the morning and we opened up the general ledger module in the computer. And there were days where we didn't have to do any journal entries. And there were days where you might have to do 5, 6, or 10. At the end of the day, we then posted. Okay, posting. It's done daily or at frequent intervals. I would say typically done once a day, posting. 5-step process. We just went over here. Enter the date, the debit and the credit, enter the journal page, and hit that posting number. Posting. And here's a simple example. Excuse me, Ali, I need a snort of whiskey here.
No problem.
Oh, that's good stuff. Okay. General ledger. Not general ledger, general journal, Ali. Here it is, cash, credited Mitchell Capital. Good, good. Step 1, we prepared the journal entry. Step 2, we hit the button called post. And look what happened to your general ledger. It now shows the $5,000 debit and the balance of $5,000. Okay? You probably do a lot of these in your homework. What is the trial balance? We talked a little bit about it. It's used to prove that the debits equal the credits. Huh? Well, that's exciting. It can be prepared anytime you want. Typically, it's done at month end, okay? It's prepared after all transactions have been journalized and posted. It has 2 uses. It proves that the debits equal the credits, and it's going to be the jump-off point to prepare the financial statements. And here is a typical trial balance. Notice that it goes in the order of assets, liabilities, equity, revenue, and then your expenses. And we simply drop in the balances from the general ledger. Remember, cash had a balance of 470. There you see it now in the trial balance. So at this point, our debits equal the credits. Big deal, huh? But that's what the trial balance would do. I've said this a couple times in this class. You guys going forward are never going to have to worry about trial balance going out of whack. No system today will let you post an out of balance transaction. It'll stop you. Back when I had to do this stuff in pencil, it was a different story. And they talk a little bit about how to find errors. I'm not really worried about this. Even though the trial balance says that you're in balance, the ledger can still be all wrong, right? The trial balance can be a total disaster, but at least it equals. A journal entry could have been crediting the wrong account, an item was posted wrong. Be very careful in preparing the journal entries and posting them. And then they talk about tips for finding errors. And again, I'm not going to get into this in any real detail. Double check your addition, double check your work, obviously. Sometimes it's a good idea to take the difference between the debit total and the credit total and divide it by 2 or multiply it by 2, and you might come up with the exact item that makes you out of balance. This is the one I like to talk about a little bit. The difference by 9. Divide the difference by 9. If the difference is evenly divisible by 9, you probably have what's called a transposition error. For example, Ali, you keyed in 63, right? It should have been 36. The difference between those 2 numbers is 27, which is divisible by 9. You keyed in 54 instead of 45. The difference divisible by 9. 81 minus 18. The difference is 63. Now, why am I babbling about this? If you check your work this way and you find that the difference is divisible by 9, there's a very good chance that you switch the numbers accidentally. It really helps trying to find where you're out of whack on your balances. Now, a trial balance is not going to go out of balance. I'm guaranteeing you that. But you might be working on a payroll report or something with a lot of columns, a lot of rows, and you want to add everything up. and you add it up, and the two columns don't add correctly. One is different. This dividing by 9 trick can be very helpful, okay?
Okay.
And and if none of these tips work, retrace your steps through the process. Double check. Peace. This is important here, Ali. Erasing is not acceptable. That's a no-no. It may suggest you are trying to hide something. Make the correction in a manner that's easy for others to follow. You should reverse the original entry and then post the correct entry. And that's a nice, clear look at what happened. They're giving you a little bit of an example here that I don't like for different reasons, but I'll show you. Correcting entry method example. Assume a $400 payment for rent expense was debited to repairs expense, but the cash was correct. Credited cash was okay. You need to get the 400 out of repair expense and into rent expense. So what do? We debit rent expense, which is where the money should have been put, and credit repair expense. I don't recommend doing the correct entries this way. This can get you into a little bit of trouble for reasons you'll learn going forward in the course, I think. Your best bet is always reverse the original entry, get you back where you started, and then post the correct transaction. Holy cow. That's the end of the slides, Ali.
That's short.
That was short. This is the first time you're seeing this material, right?
I'm taking another course, I believe it's a 230. Yeah, so I've seen this, but it's a perfect timing that we're going through it right now because I really did bad on my last testing. I didn't understand this well enough.
I see that. That's pretty typical. Who's your teacher in 230?
I believe it's Laura.
Laura Wyack.
Yes.
Yeah, Laura. I've known her for a long time. She's good. She's a little loud though, right?
I haven't gone to talk to her yet, so I don't know her personality yet.
Okay. Yeah, well, I'm just kidding around. She's very, very nice, very outgoing. All right. Yeah. You have any questions or anything, Ali?
No, just what you said earlier about the correction, I understand why you wouldn't want to post it that way. I worked for a small business before where I made a mistake on Peachtree and I tried correcting him like kind of this way by making a note that I made an error to the account, that I was going to switch it over. And the teacher ended up getting confused with all the numbers. So, I mean, not the teacher, the owner got confused with the numbers. And she's like, you know what? I'm just going to delete that transaction and I'm going to post it the right way. And I was like, okay.
Glad to hear you're getting it from the real world as well, huh?
Yeah.
Okay, well, I'll let you go, Ali. And don't forget, there's plenty of tutoring if you need it for this class or 230. Don't be shy showing up for tutoring.
Okay.
All right, we'll see you later.
Bye.
Bye-bye.